We will be recording the call, at least the bulk of it. When we get to the Q&A, we'll probably shut the recording off in case you guys have questions that you just don't want to have on a recorded basis. But we did want to record it for any of those folks who were not able to attend the call with us today. So very excited to have Ami Kassar with us for this Lunch and Learn. Ami's the founder and CEO of Multifunding, the author of The Growth Dilemma, and is really known as a thought leader around business finance within the industry. He's helped thousands of business owners achieve their goals through creating creative and personalized funding options. And for more than 20 years, he's been helping and challenging executives to think differently about how they can capitalize on their growth. So with that, we're excited to welcome Ami to speak with everyone on managing your business through this uncertainty.
Thank you, everybody, and welcome, and thanks for taking part of your lunch to be with me today. Jeff has shared so much about me, and I think I know some of you, so we're going to pass on all the bio stuff and dig in. I want everyone to think about managing their business like a football team. A good football team operates well with a good offensive and defensive strategy. And that's how I'd like to encourage everyone to think about their business. You want to be ready for the unexpected that could happen that's bad, or the unexpected opportunities that circle around that are positive opportunities for you. I'd love to know, and I'm going to ask Jeff to put up a poll just for the purpose of this group. If you compare your profitability this year compared to last year, how are you doing? Is your profitability, not your top line, your profitability down or up this year? If you guys don't mind punching in the polls, and if you don't know the answer, you don't know the answer. But if you could punch in the polls, that would be great.
Give it just a couple more seconds here. Looks like we got the bulk of them.
All right, what do we got, Jeff?
All right, I'll share the results here.
All right, so we're seeing about 56% of the people up and 44% down. And that's sort of similar. There is genuinely a lot of confusion out there in the market. Some people are doing great, and some people are not doing so great these days. Why do I ask about profitability? Friends, I couldn't emphasize this more. Revenue is vanity, and profits are sanity. Profits and cash flow are about what keep things moving. I don't give a damn about top line. I give a damn that you're making money, that you are aware of it, and that things are good. I'll share with you some of what we're seeing out there in the market across different industries. Sadly, especially in the SBA world these days, there are higher SBA loan defaulting, which makes banks nervous. Why? What's going on out there? It is for many a challenging environment. Yes, we are in the middle of an election season, and the election creates uncertainty. However, I think that there's also sort of a perfect storm going on right now, and I want to chat a little bit about it. For many businesses, either for cash that you got or cash that your customers got, COVID cash is drying up. There was a lot of excess cash floating around the system for a long time. And it seems as many companies grew to rely on that, and if that started to dry up, it's creating problems for them. Coupled with higher costs, not just labor and supplies and material and interest and everything, it's tough. And if you hit flat demand and you have higher costs, and you don't have COVID cash anymore, and you're in the middle of an election season, this can create a complicated environment for you. If you are in this camp, I want you to take a deep breath. You're not alone. The economies don't grow to the sky forever, and neither do companies. Things come and go, and there are twists and turns, and you just have to get some support to be around. I'm glad ARA is doing this. I think it's an important topic, and if you're having a tough time, there are resources there to help you get through it. Today, I want to cover 4 critical areas. I want to talk about cash and finance, overhead and accounting, new opportunities in sales and mindset and health. Let's dig in and start with cash and finance. I could not emphasize this more, but if suddenly your business is hitting some cash flow walls, and that's happening more and more these days, and you are running into a wall, it's super tempting to go online and get money in 24 hours. The problem is that these loans, which often involve rapid paybacks, put you on a short-term debt treadmill that usually people fall off of it face first. I caution anybody to be extremely careful of short-term lenders and talk to anyone off the ledge if and before you're about to do this. If you have SBA loans now, there are opportunities to restructure your SBA debt. If you got an idle loan during COVID, there are opportunities for idle payment relief, and there are ways and opportunities to restructure SBA 7A loans. For idle loans, you can pay 10% of your monthly payments with an extension for 6 months, and then you can get additional opportunities to do that if you need it, to apply for the government. And if you have an SBA loan, you can get up to 6 months of payment relief, but you can also increase your existing SBA 7A loans by up to 10 years, reducing your payments. I could not emphasize more that we believe a solid banking relationship is critical. You want to be in your bank's sweet spot. You don't want to be unimportant to your bank, and you don't want to be too big for your bank. Remember that banks are for deposits, treasury management, and loans. Encourage everyone to go online and check on the health of your bank. And there are a couple of resources to do this. There's a site called Weiss Financial Ratings and Bauer Financial where you can do this. Bauer Financial will tell you your bank or credit union will give you stars. If you're 4 or 5 star, you're likely in decent shape. Anything below that, something to be worried about. And Weiss Financial Ratings will give your bank a grade. A and B is good. C, D, or E, it's time to find a different bank. Remember that if you have deposits under $250,000 in your bank, all of that money is insured by the FDIC. If you have more than that, you should check that your bank participates in a program called IntraFi, where they transfer money every night to other banks, so your deposits are guaranteed. Also remember that banks are there to give you access to credit, and this is super important. And I could not emphasize more how important it is to be transparent with your bank and let them know what's going on in your business. If there's going to be a problem coming up in your business in 3 or 6 months, you're much better off to let your bank know now rather than later. Super excited that we've just actually launched a partnership with a bank where we can help you folks get loans and lines of credit and full treasury management deposits. It's currently live in Florida, Georgia, Massachusetts, North Carolina, Pennsylvania, Rhode Island, South Carolina, and Texas. And I actually think we're missing the super important state of Connecticut on that list. But this is an opportunity, and we'll be sharing these slides with anybody who's interested. The question for you is, and I'm going to ask Jeff to put up a poll, how strong is your relationship with your bank? Do you know your relationship manager? Do you have relationships with multiple people? Oops, Jeff, I think we missed a poll, so here we are at the next one. Do you have relationships with multiple people at your bank? Or are you a geek like me, and do you have the bank CEO's phone number in your cell phone? Go ahead if you can and just share with us how strong you would suggest your relationship with your bank is.
Answers are flowing in. I'll give it just another few seconds here.
Okay.
Right.
What do we got? Okay, so I'm very happy that most people have relationships with multiple people at your bank, and this is really important. You need to have multiple relationships with folks at your bank. Relationship managers move around like flies, and you want to be sure you're in a good place. If you have a bunch of debt and cash flow is tight, there are opportunities to use the SBA to refinance your debt. It's an example of a rental equipment company that had accumulated $1 million of equipment leases that was costing them $22,000 a month to service. We were able to get their monthly payments down to $13,500 by putting the loans on an SBA loan, saving almost $8,000 of cash flow a month. The opportunity is back to that offense and defense. If you improve your lending situation through cash flow, this will make you better equipped to handle market downturns and have an additional cash flow for growth when you need it. Sometimes if you have a business, here's a manufacturing business that had equipment and a building, and they had a building mortgage of $13,700 a month and equipment of $20,207. They managed to put it all in an SBA loan, reduce their monthly payments to $25,000 a month, also improving cash flow by $100,000 a year. I'd encourage you to check on your working capital levels. Working capital is super important, especially in a downturn economy. You want to have flexibility. Couldn't emphasize this more, to handle the ebbs and flows of business that are most likely going to come. And on a poll, assuming you have a line of credit, is your line of credit currently greater than or less than 10% of your top line sales? If you don't mind punching that in, that'll be great. Is your line of credit greater than 10% of your top line sales or less than 10% of your top sales? And if you don't have a line of credit, then it's obviously going to be less than 10. Go ahead and put that in the polls if you don't mind.
Go.
It's about half and half. As a thumbnail, we like to see lines of credit around 10% of top line sales. And I think it's super important, if you don't have that, to consider getting it. The line of credit is like an insurance policy. It's there for seasonality, working capital, and emergencies. It's there to help you when with the unexpected slowdown or unexpected things that suddenly happen, so you don't have a crisis on your hands. But be careful how you use your line of credit. They should not be used for capital or long-term investments, and they really are there for working capital, seasonality, and emergencies. Sometimes people have a line of credit specifically for equipment, and that can be a little bit different. What is your line of credit coming up for renewal? Another thing important to look at. And depending on how your business is doing, and if that process is going to be difficult, it might be time to start looking at that now and going through a competitive process. If your line of credit is being close to maxed out, you could consider terming it out. And in this case, sometimes you would use an SBA to get a 10-year amortization on the termed out piece instead of 5. You also have to think about your reserve strategy. How many months of cash do you want in the bank just in case? Come up with a number and do your best to keep to it. In tough or pending tough financial times, it's also important to watch your payables and manage them carefully. And pay extra attention to your AR and don't let it get out of hand. If you're lending money, if you're extending terms, you're effectively lending money to people, and you want to make sure you're doing a good job. Before I jump into the next section of overhead and accounting, I just want to stop. And if anyone has any questions right now, you can feel free to just say hello or raise your hand or put it in the chat. And if there are no questions, we'll keep going. Questions going once, questions going twice, questions are over. Did we have something?
Yeah, we did have one that came in, and it was talking about for the line of credit. You had said around 10%. Is it of the top line? Is there any formulas that you're able to use to determine that, other than just that top line sales, or what are your thoughts around that?
I mean, that's really a starting point, and happy to have a conversation with anyone one-on-one about that. But that's a thumbnail. It's going to be a little different from industry to industry. I don't think there are many industries here that have, or businesses in here that have a lot of AR and inventory. So there can be different formulas if you're a heavily AR and inventory intensive business. So it's a bit of a one-on-one case that we talk about offline if you want to.
Okay.
Anything else?
There is one, why not use line of credit for long-term investments, such as tents?
Because the line of credit is there for, see, now, if it's for tents and tents are part of your inventory and you're constantly managing them and you have enough of a line of credit to cover that, then you could do that. So it depends where you have the tents on your balance sheet. But if you're making investments that are going to take a long time to pay off, that is usually better done with term debt. What's important about the line of credit, remember that offensive and defensive thing, is you want it to be there when you need it.
Yeah.
And so can we ask whoever that is to go on mute, please? So you want to make sure that you have that availability when you need it. So if you use up all your line, say for buying tents, and then you don't have any availability, then you've got a problem. Sometimes, oh, I'm sorry, Jeff, were there any other questions?
That was it at this point.
Okay. I don't know if we went to a basketball game tonight, and I came to your city and we went to a basketball game, and the players were running around the field with their shoelaces untied. I suspect that would make you quite nervous. And the reason I bring up that analogy is that's how I feel when I meet business owners or entrepreneurs whose financial statements are a mess or they don't have them in control. I could not emphasize more the importance of having good, clean bookkeeping and accounting so that if the time comes when you need money or to go back to the bank for this, you're ready and organized. We do have a system, and we share the slides called an accounting health check, what we just launched with a partner called Signature Analytics. And what this does is they'll come in and they'll review all your accounting processes, people, procedures, and give you a report card on how you're doing and how well your controls are. And I couldn't emphasize this more. Good accounting is like maybe the most critical thing. So you have a good handle on what is and what isn't going on in your business. Also, if you are in a tough economic time or you see sometimes coming, this is the time to cut non-essential expenses quickly and to consider top grading. And what I mean by top grading is here's a time or a chance to clear people out of your organization that aren't the very best. Some folks are offshoring certain jobs to save dollars. And as you reimagine your organizations, these can become substantial cost-saving opportunities as well. If you are considering a layoff, I couldn't encourage you more to work with your HR or counsel on any layoff to make sure you are in compliance and be transparent with your team about what's going on. There are also AI opportunities with tools can help you save money and make money, and these are opportunities to consider as well. Before we jump in, Jeff, any questions on overhead and accounting?
Not at this point.
Okay. Also, managing economic uncertainty is also about looking at new opportunities and sales. Remember that sometimes it's us as the owners who are the best salespeople for our company. And when the going gets tough, sometimes the best thing to do is to get out there back in the field and start selling again, and maybe relinquish other responsibilities to other people. We need to try new things. If what you've been doing for a long time suddenly stops working, beating your head against the horse and keep doing exactly the same thing is probably not a good idea. It is time to try and innovate some new products and services or offerings or price structures and really get that innovation head about you. You can read about an OODA loop, which is a decision-making framework that consists of 4 stages: observation, orientation, decision, and action. What's going on there? What has changed? So for the woman who's waiting for the election, well, what's your plan if things don't change after the election? Should you be trying new markets, new services, new opportunities? are the opportunities that the downturn is bringing for you and your business that you weren't able to take advantage of before. As you think about opportunities, be clear on who your core customer is and the products and services you're offering them. Look for additional revenue sources and act on them, one of them. Challenge every assumption that you've always made about your money and how you save money. I always remind people to think about when COVID hit, and there were some restaurants, one I'll never forget it, in a strip mall near me. One restaurant just shut down, and a restaurant right next to it, within a week, people were lined up out the door with masks to pick up takeouts. Who do you want to be when crisis hits your company? The last section I want to cover before we hopefully go into some Q&A is about mindset and health. If your business is going through a tough time, I think you have to be clear in deciding how transparent you will be with your team about what is going on. I was there, especially for smaller companies, to be really clear and transparent, which is super important. If an entrepreneur or business owner is having a tough time, you can take this out on your family. Be cognizant of this and give them the love and attention that they deserve. And as hard as it is, find time for exercise and to take care of yourself, or the stress can get insurmountable. Mindset is everything in this. Feelings of failure and ego make it harder to act. You have to snap out of it, figure out how to push through. In difficult times, the tough get going. If you're going through hell, keep on moving, as John was saying. Today, we've talked about, I really want to stop and have a conversation soon, cash and finance, overhead and accounting, new opportunities in sales and mindset and health. And all of them, I think, are interrelated as a part of an ecosystem to getting you through a difficult time. Here's information to connect with us. And while we put that slide up, I really want to try to ask any questions.